Hey guys, and welcome to today's video, and today we're going to be talking about order blocks. So what is an order block? So an order block is a move against the trend. Now there are two types of order blocks. Okay, so as you can see over here, this would be a bullish order block, and as you can see over here, this would be a bearish order block. Okay, what you can see here is an uptrend of green candles, and then all of a sudden you see a down candle. This down candle, this move down, is what we call the bullish order block. And then over here you can see a series of down candles, right? A series of down candles is what? A downtrend. And then you can see what? A green candle. That is a bearish order block. Okay? So, why do they form? And why is this important? The reason these types of order blocks form, right? The reason they form is because smart money accumulates orders within them. So within a bullish order block, smart money is accumulating longs, and within a bearish order block, smart money is accumulating shorts. How so? Let me show you. So here, let's see. So when we're in an uptrend, smart money is going to defend the trend with limit orders. They're going to scatter limit orders to defend certain levels that they want to buy at, or so on. So let's just say if I'm moving price up to a certain target, then I'm not gonna want price to go to certain places as it's going to that target. So what am I gonna do? I'm gonna use my large capital to defend those places. If I set limits at those places, price cannot go to those places unless somebody with more money than me decides to move it to those places. And there's nobody with more money than the smart money. So the smart money will defend the trend with limit orders. In a bullish trend, the smart money will set limits directly under minor points of sell-side liquidity, such as a previous candle's low. And then if retail decides to enter shorts, so if price is currently moving up, right? Imagine price moving up. I have my limits slightly under where price is. So this is where price is, this is where my limit is. If somebody from retail wants to sell, I'm constantly buying price up. But if somebody from retail wants to sell, where is going to be the nearest buyer? Boom, down here. That's going to cause that move down from here to here. So retail selling is causing this move down. And that's what's forming the order block. Okay, so retail selling, this is one of the only times where retail actually gets to move price, is when retail sells within an uptrend and smart money intends for price to draw to this level. Then price will come down to the smart money buy limit orders, and it will fill them on their limit orders because retail is selling. Also, what will also do, it will trigger sell-side liquidity. As you notice in this example over here, you see this pattern over here. This pattern, this is bullish structure. Retail wants to buy here and set their stop loss right over here. This means that sell-side liquidity is being introduced at a low price under this. What does that do? When price moves down to here to my limit orders, now not only the retail sellers that decided to sell to me want to sell, also the retail buyers who are now deciding to exit their positions are also selling, and I get to buy even more. So over here, I have bought a lot. Okay, this is the bullish order block. Now, where else do I get to buy? On the way up, right? On the way up now, we have a bearish pattern, right? We broke structure to the downside. That's bearish structure. Retail wants to sell at this. So if retail is saying their sell limits at the optimal trade entry or premium, whatever, if I want to move price above it, now I'm going to have to buy out all of those limits, right? So as you can see, all of these limits, I'm going to have to buy them out to lift price up. And then this gives me pretty much 3 different opportunities to buy within one move down. This is the bullish order block. It's exactly the same with the bearish order block, just inverse, okay? So smart money scatters their limits under sell-side liquidity, such as this over here, right? Here you have this low under the sell-side liquidity. Smart money scatters their limits right over there. And then when retail decides to sell, price draws to those places, and that's pretty much where smart money gets to buy. Okay, so yeah, and then smart money accumulates longs in this entire move. Okay, now this all happens as we're delivering to a certain target. So let's just say I have a target, and that's right over here. Price is currently over here. Price is currently here. Okay, as I'm moving price up to my target, I'm gonna want to defend it so it moves to my target, right? So I'm gonna set limits below it, and then if retail decides to sell here a lot, boom, move down, and then I buy it back up. Boom, move down, then I buy it back up. Boom, we take the target. Once we take the target, it's irrelevant, okay? The order blocks are all irrelevant once we take the target, because that is where smart money squares up their positions. And if they have squared up their positions, all of these buys from these places, then it's irrelevant. Those order blocks are not gonna be high probability areas for support. So let's go on to how can we utilize them. So now that we have established that what is an order block, we also established the underlying logic that most people seem to be completely ignorant of. Now we can get into how exactly you can utilize them. So in order to make use of an order block, you must have the following criteria. So one, you need to have a bias. You need to understand where price is going to, right? So if I think price is going from here to, from here to here, then I'm gonna look for bullish order blocks over there. And then also you have to understand the liquidity, because sometimes, right, when price is moving from a certain place to a certain place, there may be on the way up, maybe we formed some liquidity that if you are just completely one-sided, if you're completely blocking your vision with order blocks, you may not notice. So if you see clear liquidity somewhere, do not ignore it. So if you see sell-side liquidity just below where you want to set your stop loss, you don't take that trade. I will get into examples. I know I'm just talking a lot right now, but when we get into the examples, you'll understand this. So you need to understand the liquidity. And then there's a third one that you guys are getting because you're watching the video, is you want to see fair value gaps in the direction that you want to take your trade. So if you don't know what a fair value gap is, I have plenty of content on that on my Twitter. You just go over there, you click advanced search, and just type FVG or fair value gap, and you will find the post. I'll try to link as many of them in the description as possible. I have tons of content on fair value gaps. You can go ahead and study that. If you already know what it is, perfect. You want to see fair value gaps in the direction of where of the trade you want to take. So if you want to long, then you want to see BISIs, buy side imbalance, sell side imbalance, sell side inefficiencies. Okay, and for the reason being, that makes your order block higher probability because it's showing that smart money is truly buying that move up and manipulating price up, and that's why there's an inefficiency. So let's get into some on-chart examples. So here is the first example we're going to look at. So if you look at this example, what you can see over here, you can see right over here, we have a bullish pattern. Let me see if I can grab a pen over here. No, I cannot. But as you can see right over here, from this high, just focus on my cursor, from this high to this low to this high is what? Bullish structure break. Also, we have a bullish trend line that I did not mark from here to here. So people want to buy at these places. What does that mean? That means that there's a sell-side liquidity pool at all of these lows, and the final drawn liquidity is at this low. We also see a fair value gap right over here, which is very nice to see. It means smart money indeed is trying to take price up. Okay. Now we can see this candle, this big fat down candle, tapping into the sell-side liquidity pool. And then it completely gets reversed. From the point it's reversed over here and the high is broken, this means that smart money has bought this, and this is a bullish order block. Okay? We can also see here fair value gaps on the way up. You see these fair value gaps. When you see these fair value gaps, that's your confirmation. Okay, this order block took liquidity. There's fair value gaps right over here. I like it. And I think price is drawn to this level, or perhaps higher. If you look at the bigger context, there is actually something saying it will go higher. It's just not included in this. So what will you do? you will look. Okay, where you will look. Okay, now price is coming up here. You see it fucking around. Then you see over here another order block forms right over here. Now this order block we don't want to pay attention to. Why do we not want to pay attention to? Also this one over here. Why do we not pay attention to these order blocks? The reason we don't pay attention to these order blocks is because 1, there's no fair value gap. 2, there's liquidity, right? Where's the liquidity? You see 1, 2, you see pretty much these lows over here. These lows over here are your liquidity. They're relative equal lows, and even a third one over here. You got relative equal lows. You don't want to be long in over here. It's also in like such a premium. You wanna wait for price to grab liquidity and come into the order block that looks more impulsive, that grabs liquidity, that has fair value gaps. Okay. So now when price has done that over here, and then it started moving away from this order block, we formed another order block right over here. This one down candle over here, this one down candle that dipped into this order block, cleared the liquidity from these lows, and then price retraced it with a fair value gap over here. As you can see, this is a fair value gap. Now we could look to long on the touch of this order block. So when price comes back down here, we can look to take another long. So there's one long opportunity here and another one right over here, and both of them you're going to target this level with. Okay, so I hope it was all clear. Let's get into the next example. This example, I said price is going to draw to this level. Now that's based off of bigger context, but I think it kind of makes sense if you guys see it. Anyways, when we went under this low over here, under this low, we cleared a lot of liquidity, these relative equal lows, and this low being our drawn liquidity. So price went under this low, cleared liquidity. Now we're waiting for what? A bullish order block to formulate. So over here we see this down move that gets reversed, almost gets reversed in a very choppy way. So that's not what we want to see. Then over here, what do we see? Boom, big dip down. Then we see these two consecutive down candles that get reversed with one up candle and a fair value gap. This means, right, why did I mark both of these candles as a bullish order block? Because if we were to go to a time frame twice as big, this would be just one candle. Okay, so now anyways, two candles get reversed and we see a fair value gap in our direction. This makes this a bullish order block. Now we can deem, so here you might be a little bit iffy. You might have some doubts about this order block because it still doesn't look so clean necessarily. But over here, we should now expect for price to start reversing and draw to that level. So now you could start accumulating buys at this order block and target this level. Now you watch for more order blocks to form with a fair value gap. So right over here, you see this tiny order block that has formed over here. I did not mark that out because I didn't want to mark these complex examples. But you could have used this for a buy in hindsight. Instead, I decided to mark this one out because this one looks more impulsive, more like a textbook example. It pretty much manipulates down, clears the liquidity from the lows of these candles, and then shoots up really impulsively, and then you see a fair value gap right over here in the direction we want. So that's why I liked this order block a lot. So I marked this one out, and then boom, price taps into it and continues up. Now you have this order block that manipulated the liquidity of all of these lows, moved away from this order block. It's two consecutive down candles, so I marked it as one order block, and it's an impulsive move, and in the direction it moved, we see fair value gaps. Now, what do we see? Price is fucking around. Why do we not want to use any of these order blocks? Because price is not being impulsive here. We're not seeing any fair value gaps. It doesn't look like the market really wants to go up from here. It kind of looks like it's undecisive over here, right? It's more choppy. So what do we wait for? We wait for a manipulation. Then boom, you get the manipulation down, impulsive move down into the order block. That's where you want to buy. And then price moves away. with a fair value gap. Now this area becomes an order block, this move down becomes an order block. However, that gets front ran and then price delivers to the final target, and then this becomes irrelevant. Okay, so let's get into the last example. The last example here, I predicted, this is when I predicted the Bitcoin bottom. I said that we would go to this level. If you want to understand why I thought we were going to go to this level, you can go ahead and watch the video that I'm going to link in the description. This video is pretty much me explaining when we were back down here, exactly why I think it's going to go up, exactly why nothing else, I don't think anything else can happen. And yeah, so anyways, now we have established that we think price is going to go to here. Now let's study this price action. So over here we see it's very choppy. Then we see an impulsive move down. When this move gets reversed, this entire thing becomes an order block. However, this move down cleared the liquidity of both of these lows. Now we could mark this order block, 3 candles, we could mark that. But I instead decided, because I saw an order block within it, and it was pretty much of the same size. So I just decided to refine this into this order block over here, because it looked more like a textbook example. Okay, so this order block manipulated the liquidity of all of these lows over here. Impulsive move down that gets instantly reversed with a fair value gap. Okay, that's the key, fair value gap. Price fucks around up here. And then, why did it come back down over here? Right, this is a perfect order block, is it not? Manipulated down, then it gets reversed impulsively. Why did it come back down here? Because in this order block, you did not have the second criteria. What did we just do here? Clear buy side liquidity. We cleared this high, buy side liquidity, tapped into a fair value gap. What is it likely that we will do if we cleared buy side liquidity? It is likely that we will manipulate some sell side. Where is our sell side? Bullish structure, right? Do you see this pattern? We break this high, that is bullish structure, and we have a bullish trend line from this low to this low, bullish trend line. So this means tons of people are going to look to buy here. Also, we have a bearish trend line that got broken out of. So that is resistance flip to support. 1, 2, 3 highs. You can mark that with a trend line and you will see there will be a buy opportunity here based off this trend line. So here, it's a perfect order block, but if you don't understand the liquidity, then you're going to get stopped out on this. So here, these lows are going to be your liquidity, and that is why price had to come back down to this order block. The reason it did that is because this would have provided the banks, the smart money, with a much more significant opportunity of buying than these even could. So this order block here, for example, would be relevant if you're targeting this high over here. However, once we have cleared this buy side liquidity, now the new target in scopes is that now we got to manipulate these lows, because now smart money set their limits. They scattered them all over this area. And as you can see, price came down to this area. They accumulated longs right over here. And then, boom, they manipulated price up to their target. Anyways, if you enjoyed this video, if you want to learn more, join my free Telegram. Follow me on Twitter. And if you want to trade crypto, sign up on BingX. And what that will do is pretty much, instead of giving all of your fees to BingX, you will give them only half, and then the other half will go to me. So I'm going to put the link for that in the description. I appreciate anyone who does that. You don't have to do that though. Don't really care. But yeah, peace.